This may come as a shock to you, but I, Jamie York, am not perfect. In fact, in today's video, I'm going to be showing you the top mistakes I made that cost me tens of thousands, so you don't have to. So number one is buying cheap. I'm a big believer in you pay cheap, you pay twice, and price is what you pay, value is what you get. Now, if you go back to the first property that I bought 4 billion years ago in 1846, it was number 36 Burdett Street, cost me £21,800. That was not the mortgage, that was the purchase price of a 3-bedroom mid-terrace property in Burnley. So it is you just watch Homes Under Hammer, buy the worst house in the best street. Nice one. This is the worst house in the worst street, in the worst area, 240 miles away from where I live, and I'd never been there in my life. Genius, right? See, in hindsight, I can see how stupid that was. Believe it or not, that was genius at the time. Me at university, getting paid cash in hand, drive up 240 miles on the Friday, do what I could in the house, sleep in the back of the van, drive back down. University took me 9 months, screwed it all up. But the real thing is, just because a property is cheap doesn't mean it's a good investment. That same property is probably still worth £21,800. And what I've really learned is a lot of people get obsessed with the concept of below market value. But when the market starts to sort of calm down and dip, what I get excited by is, can I get access to better value areas? So now you need to understand, let's say I get a £200,000 property and I get 30 grand off it. You think, whoa, amazing, right? Well, the thing is, no, because if I've got 30 grand off, there's usually a compromise. Either I've had to go ridiculously quickly. I'm not talking weeks, I'm talking buying in a couple of days. There's a problem with the property, there's a problem with the tenant, or a problem with the owner. And so now what I'm focused on is what's happening in the 20 to 30 year period that I'm going to own that property. So I'd rather pay market value in a better area that I'm now able to get access to because the competition's closed down a little bit. And then in 30 years time, that property has doubled, and doubled again, rather than going back to Burnley. Not all Burnley, by the way, where I bought this. The £21,800, 4,000 years later, is worth 10 grand. What happened there? So price is what you pay, value is what you get. Focus on the value of the property, not the price that you can get. Number two, I am not a landlord, and nor are you. I am an investor, and so should you be. A lot of the time we get emotionally engaged with it, but it's like, it's either a hobby or an investment. You cannot get emotionally engaged with your tenants. You shouldn't really be friends with your tenants. And I cross this line quite a lot, and 50-50 for me, really. But more importantly, I don't want to go to the property. I own property. I don't have a clue where it is. Well, I do know the addresses, but I've never been to the properties. I don't need to. We've got inspectors. We've got it refurbed. We've got it tenanted. We've got managing in place. And so should you. Almost every single investor, one of my companies, Aspire Property Group, we build property portfolios for people. I would say in the last year, we did about, I think it was 230 properties, but don't quote me, but let's say between 200 and 250, definitely in that range last year. And I think we had 2 investors wanting to view the property. And then they didn't in the end. I think one of them ended up viewing. But all of the rest, they have never seen their property, and they never will. Why? Because it's an asset. You buy stocks in Facebook online. You don't insist on going to their headquarters. You don't insist on meeting Zucks, do you? And so when you're buying gold in vaults, you don't go and see the gold. Not very often anyway. And so property is an investment that returns. You are not a landlord. Don't get involved. Be an investor. Number 3, do your due diligence. So much I've seen a property where I'm like, how beautiful is that? Look at this. And I've got it out of my mind. The look of the property means nothing. One question that we often ask for, which I think is absolutely stupid, is would I live there? Why does it matter? You're not living there. What does somebody local want? What do they live in? What's the demand versus supply? What rent are they willing to pay? What price am I paying in relation to that rent? Am I getting the returns? Has it got capital growth in the area? So you need to know your numbers, and I love data. I love spreadsheets, and none more so, an app that I use is Property Data. So Property Data is an analytics tool. I feel like I'm pitching them. There's no, not sponsoring the video or anything, but we use that every single day, analyzing our properties to understand the schools in the area, the demand in the area, the rent. Is it a buyer's market or a seller's market? Well, data allows you to assess things properly, to allow you to put in the best offers and work from analysis, not emotion. On that note, I've put a link below. I will get 3.7 pence if you sign up to this, but you can go on there and then we've got a free link for the next 2 weeks, so you can download it, utilize it as much as you want for free for 2 weeks. And if you absolutely love it, it's something like £12 a month, and I get about 3 pence of that. So it is an affiliate link, but genuinely check it out. It will blow your mind. Number 4, have an exit strategy. A lot of the time, and when I say an exit, I mean multiple exits. A lot of the time I see people going in, and let's say they go, oh, I really want to turn this into a service accommodation. And so they end up going for a rent to SA or a purchase service accommodation, and they do all of their numbers based on it working. Now, the thing is, number one, they don't even know their numbers. So they'll go, oh yeah, I'm going to get 80% occupancy. I have barely ever seen a service accommodation that long-term has 80% occupancy. Much more likely is in your 60% occupancy rate. And then what happens is their house gets trashed a couple of times by, not the ideal customer staying there. And they end up going, oh, service accommodation isn't for me. It's a lot more work than I thought. The money's not as exciting as I thought. Do you know what? I'll hold it as a buy-to-let. Oh, wait. I didn't actually analyze this as a buy-to-let opportunity. Oh, wait, I'm going to sell it now. Oh, no, wait, I didn't actually assess the demand in the area to know if it was going to go up or down in value. Do your numbers, especially if you are utilizing a strategy that is on top of the boring, vanilla buy-to-lets that I love so much in my life. So every property that I ever buy, even if it's a conversion or a flip or something a bit more cool like the service accommodation side, is more importantly, does it work as that boring, vanilla buy-to-let? If it doesn't, genuinely, I will walk away from the property. It is not worth the risk. You think of all these things, all these pressures, all these fads that go on, think of service accommodation, all the pressure that they get from hotels, and that will come through. They are more powerful than you. Eventually, a lot of these strategies just won't exist, or in a very different format, but buy-to-let will always be there. On that note, and finally, you need to know your strategy. So many people have that magpie effect. Oh, rent to rent. And then you see somebody put on their Instagram story, they're doing SA instead of rent to rent. Oh, maybe I'll do service accommodation. I can make X amount instead of Y amount. Now I'm making more money. Oh, actually, that's actually a really active income stream. That's so much more hard work than that guru told me. Do you know, I might go to buy-to-lets. Oh, I love buy-to-lets, but now I've put all my money in and I'm getting my return. Now I'm bored. What do? Oh, do you know what? I'm going to do a commercial conversion. Oh no, wait, I've never fucking done a development in my life. That was a stupid idea. Now I need to sell that. What about a land development? You see my point. The thing is, all strategies work, all have pros and cons, active income, passive income, complexities and simplicities, higher returns, lower returns, risky returns, low risk returns. But ultimately, if you don't have a strategy, you can't get tactical. And if you can't get tactical, you can't have an attack plan. If you don't have an attack plan, you ain't gonna make money, because the one thing that it takes is consistency. So before even delving into property and throwing yourself in, do the analysis. Understand as much as possible. Look at your personality, your cash pot, what time you've got available, what experience you've got, and then go all in on that strategy and focus on the one thing that's going to move your needle forward. Hopefully this has been valuable as a video to you. If you are sat there going, I want to buy property, I want to build a portfolio, but I don't have the time or inclination, that's where I come in, and you can put APG in the comments. If you've got 100,000 or more to invest and you don't have the time, I will help build that portfolio. So put APG in the comments, or we'll put a link in the description where you can go on and fill in your details and have a chat with one of my team. If you are new to the channel, make sure to hit the subscribe and the notification bell. I'm posting videos every single week now to help you grow your property portfolio in the UK. And of course, if you did get value on the way to this video or one of these to the side, click the like and I'll see you there.